The mining sector is the backbone of modern civilization, playing a pivotal role in our daily lives. It provides the raw materials we need for everything, from the simplest household items to the most complex technological devices. From the cars we drive to the buildings we live in, mining is essential. Without it, the infrastructure of our modern world would not exist. It fuels our industries and powers our technologies, ensuring that we have the energy and materials needed to innovate and grow. Understanding this sector is crucial for investors as it directly impacts the global economy and market trends. Mining companies extract valuable resources from the earth, such as metals, minerals, and fossil fuels. These resources are then processed and used in various industries, from manufacturing to energy production. The sector plays a critical role in global economic development, driving trade and infrastructure projects worldwide. It also provides jobs and supports communities around the world, fostering economic growth and stability in many regions. The demand for mined materials is constantly evolving, influenced by technological advancements and changing consumer needs. New technologies and global trends influence what is needed, pushing the industry to adapt and innovate continuously. This dynamic environment creates both opportunities and challenges for mining companies, requiring them to stay ahead of the curve. Investors must understand these shifts to make informed decisions, balancing potential rewards with inherent risks. The mining industry is not without its complexities. Facing numerous technical, environmental, and regulatory challenges, it faces environmental and social pressures as communities and activists demand more sustainable practices. Sustainability is becoming increasingly important, with a growing emphasis on reducing the environmental footprint of mining operations. This adds another layer of consideration for investors looking at the sector, as they must weigh the benefits of mining against its environmental and social impacts. The global mining market is highly concentrated, with a few key players dominating the scene. A small number of companies hold a significant share of the market, making it a competitive yet tightly controlled industry. These large players dominate the industry, setting trends and influencing market dynamics. This concentration has profound implications for investors who must navigate a landscape shaped by these dominant entities. The top 10 mining companies control a large portion of the market capitalization, holding significant sway over the industry's financial health. This means they have a significant influence on commodity prices, which can fluctuate based on their decisions and strategies. Their decisions can impact the entire sector, affecting everything from stock prices to the availability of resources. Investors need to be aware of these dynamics to make informed decisions and mitigate potential risks. Market concentration can create both opportunities and risks, offering potential for high returns but also posing significant challenges. On one hand, it can lead to stability and efficiency, as large companies can leverage economies of scale. On the other hand, it can limit competition and innovation, potentially stifling smaller players and new entrants. Investors must carefully analyze the implications of this concentration, considering both the benefits and the drawbacks. Understanding the competitive landscape is crucial for investment success, as it helps in identifying the key factors that drive the market. Knowing who the major players are and how they operate is essential for making strategic investment decisions. This knowledge helps investors make informed decisions about where to allocate their capital, ensuring they are well positioned to capitalize on market trends and opportunities. Mining companies operate across the globe. Their geographic distribution reflects the location of mineral resources. Some regions are rich in certain minerals, while others are not. The operational focus of mining companies varies. Some specialize in precious metals like gold and silver, others focus on base metals like copper and nickel. Some are diversified across multiple commodities. The top mining companies often have operations in multiple countries. This diversification can help mitigate risks. It also allows them to access different markets. Investors should consider the geographic distribution of a company's assets. Understanding the operational and geographic distribution of mining companies is important for investors. It provides insights into their risk profile and potential for growth. This information can help investors make more informed decisions. Some mining companies have consistently outperformed the market. These industry leaders demonstrate strong operational efficiency and strategic decision-making. They often have a history of successful projects and a proven track record. Analyzing the performance of leading mining companies can provide valuable insights for investors. It can help identify companies with strong management teams and effective strategies. These companies are often well-positioned for future growth. Market leadership is not static. Companies can rise and fall in the rankings. Factors such as commodity prices, technological advancements, and geopolitical events can all impact a company's performance. Investors need to monitor these factors closely. By studying the performance of market leaders, investors can gain a better understanding of what drives success in the mining industry. This knowledge can help them identify promising investment opportunities. Section 5. Opportunities and obstacles, a two-sided coin. The mining sector offers significant growth opportunities. The demand for critical minerals is increasing. This is driven by factors such as the energy transition and technological advancements. The rise of electric vehicles and renewable energy technologies is creating new demand for minerals like lithium, cobalt, and copper. Mining companies that are well positioned to supply these minerals are likely to see strong growth. However, the mining sector also faces challenges. These include fluctuating commodity prices, rising operating costs, and increasing environmental regulations. Investors need to be aware of these risks. Geopolitical instability and resource nationalism can also impact mining operations. These factors can create uncertainty and disrupt supply chains. Investors should consider these risks when evaluating investment opportunities. Section 6. Investing wisely. Strategies for success. Investing in the mining sector requires careful planning and diversification. Investors should consider a range of factors, including commodity prices, market trends, and company-specific risks. Diversifying across different commodities and geographies can help mitigate risks. Investing in a mix of large, established companies and smaller, growth-oriented companies can also be a good strategy. Due diligence is essential before investing in any mining company. Investors should carefully analyze a company's financials, management team, and operational performance. They should also consider the company's environmental and social impact. Seeking professional advice can be helpful for investors who are new to the mining sector. Financial advisors can provide guidance on portfolio construction and risk management. Section 7. Staying ahead. Monitoring market dynamics. The mining sector is constantly evolving. Commodity prices fluctuate, regulations change, and new technologies emerge. Investors need to stay informed about these developments. Monitoring market trends and news is crucial for making informed investment decisions. Investors should track commodity prices, industry reports, and company announcements. They should also be aware of geopolitical events that could impact the sector. Staying up to date on regulatory changes is also important. Environmental regulations and permitting processes can significantly impact mining operations. Investors need to understand how these regulations might affect the companies they invest in. By staying informed about market dynamics, investors can anticipate changes and make adjustments to their portfolios as needed. This proactive approach can help them maximize returns and minimize risks. Section 8. The future of mining. A positive outlook. Despite the challenges, the long-term outlook for the mining sector remains positive. The industry has shown resilience and adaptability in the face of various obstacles, including economic downturns and regulatory changes. The demand for minerals is expected to continue growing, driven by global population growth and technological advancements. As more countries industrialize and urbanize, the need for raw materials will only increase. The energy transition and the shift towards renewable energy sources will create new opportunities for mining companies. This shift is not just a trend, but a necessity for a sustainable future. The demand for critical minerals used in batteries, solar panels, and wind turbines is expected to increase significantly. These minerals are essential for the development of clean energy technologies. Mining companies are also investing in new technologies to improve efficiency and reduce their environmental impact. Innovations such as electric mining equipment and water recycling systems are becoming more common. Automation, data analytics, and artificial intelligence are being used to optimize operations and reduce costs. These technologies enable more precise extraction processes and better resource management. The future of mining is likely to be characterized by innovation and sustainability. Companies are increasingly focusing on reducing their carbon footprint and implementing eco-friendly practices. Companies that embrace these trends will be well positioned for success in the long term. By staying ahead of the curve, they can ensure their operations are both profitable and sustainable, securing a bright future for the industry. Section 9, ESG considerations, a growing focus. Environmental, social and governance (ESG) factors are becoming increasingly important for investors in the mining sector. Companies with strong ESG performance are often seen as more sustainable and less risky. Investors are increasingly scrutinizing mining companies' environmental impact. They are looking for companies that are committed to reducing their carbon footprint and minimizing their impact on biodiversity. Social factors such as community relations and labor practices are also important considerations. Investors want to see companies that are operating responsibly and contributing positively to the communities where they operate. Governance factors such as board diversity and executive compensation are also becoming more important. Investors are looking for companies with strong corporate governance practices that promote transparency and accountability.